Tesla's able to make a lot more money on the sale of those, and they don't have the legacy costs. They don't have all those costs for pension and the legacy issues with factories that many of those other competitors that you're rightly calling them competitors, they are competitors, but they have significant dealer networks and everything else that cuts into their profitability dramatically.
In today's video, I'm going to be roasting some clueless clowns. We have some embarrassing new price targets out of a Wall Street firm. I think they go by the name The Muppet Show, showing they have absolutely no idea what the f they're talking about. And I'll also be reacting to another talking head in the mainstream finance media espousing absolute drivel about Tesla and Tesla stock. What a surprise. Another person on CNBS who has no idea what they're talking about. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
Guggenheim initiating coverage of the EV space today with neutral ratings on both Tesla and Lucid. The firm saying it has positive long-term view, but says the whole electric vehicle industry could have slower growth than many are expecting.
It's the Muppet Show with our very special guest,
Guggenheim. So, Guggenheim have initiated coverage on both Lucid with a $38 price target. Oh, and by the way, what's Lucid stock trading at this point in time? What do you know? $38 per share, an astonishing $62+ billion market capitalization after having done literally nothing. Sure are a lot of hopes and dreams riding on this one. Good luck. They've also initiated coverage on Tesla stock with a $924 per share fair value for Tesla. Tesla currently a few dollars above that. In other words, Guggenheim believe that both Lucid and Tesla stock are completely fairly valued at this point in time. Now, everyone's entitled to their opinions, and my opinion is that these guys and girls are absolute fucking muppets. I'll explain why. First of all, Lucid's valuation is absolutely fucking insane. Maybe they'll grow into it, but at this point in time, Lucid's valuation makes less than 0 cents. It's absolutely bonkers. Ramping to volume production without going bankrupt is the massive challenge ahead of Lucid. Lucid have yet to scale the mountain. They're still at base camp. They haven't reached volume production. Now, that is the major challenge. Just to survive the decade, Lucid will need to execute nearly flawlessly. Tesla has proven their ability to execute near flawlessly over the past 15 years. Lucid doesn't have a track record, yet Guggenheim, Tesla did it. Obviously Lucid can do it. It can't be that hard, right? As for Tesla, in my opinion, the best risk-adjusted opportunity in the entire stock market. Sure, there's probably others out there that are even better, but I don't know about them. That's why I'm still pouring every spare cent into Tesla stock. Yes, I bought more Tesla today, $888.69 per share. But the fact that these clowns think both Lucid and Tesla are fairly valued, this isn't the major issue that I have. I'm not going to lie, it is pretty embarrassing, but this isn't the primary reason I'm about to lay a cable over the faces of these fools. 1 year ago, Tesla stock was approximately $900 per share. Today, Tesla stock is approximately $900 per share. And the folks over at the Muppet Show known as Guggenheim think that in 1 year, Tesla stock will be worth about $900 per share. In other words, for a span of 2 years, Tesla stock will have done literally nothing and still be fair value in their expert opinions. Yet over that same span of time, Tesla will approximately quadruple their annual production, be printing multiple billions of dollars of pure profit every single quarter, maintaining a staggering rate of growth, expanding like no other company at this scale has ever expanded before, continuing to extend their unassailable lead, increasing their margins, and dramatically decreasing the price of their vehicles. If it were just the $924 price target for Tesla stock, oh look, they're idiots, they don't know what they're talking about, let's move on. But here's the thing that really gets me fired up. In addition to their $924 fair valuation for Tesla stock, they also have a bear case price target of, wait for it, $350 per share, and it gets even better. A bull case of $1,963 per share for Tesla stock. There's nothing inherently wrong with having a bear case, a base case, and a bull case price target. In fact, I literally have these available exclusively on Patreon. Hit the card in the corner or the link in the pinned comment. These are available for the next 10 years, all the way out to 2031. But if there's that much variation between your worst case and your best case scenario, it's an admission of absolute cluelessness. Guggenheim may as well have published a note along with these new price targets saying, hey guys, we don't know what the actual we're talking about. We are so absolutely clueless and lack conviction in our research around Tesla that we're going to give a spread of potential outcomes that is so wide, so vast, so gaping and embarrassing that some idiot who doesn't know anything on YouTube is going to spend a video roasting us. To provide some context for how clueless these gigantic pussies are, aka no courage, no conviction, and no clue, their bull case is more than 5 times higher than their bear case scenario, and their base case is about half of their bull case. It's totally fine to have some variation, but the reason that I've called these folks gigantic fucking pussies is because their current price target is what Tesla's worth today. But just to cover their bases, because they don't know what they're talking about, they have an absurdly low bear case price target, proving they have no idea what's going on, and a bull case price target that allows Tesla stock to double just in case they have no idea what they're talking about, which are, spoiler alert, they don't. It's just so pathetic. I'd rather they have a single price target and be completely wrong than admitting that they're so unsure of their research, they're so uncertain of themselves that they need to cover all bases with a range of about $350 per share all the way up to almost $2,000 per share for Tesla stock over the next 12 months. It's pathetic. It's like a guy who's unsure of himself, who questions everything. Ask 100 women what is the trait they find most attractive in men, and the vast majority, if they're self-aware, will respond with confidence. As repulsive as women find insecure guys who are really unsure of themselves, I too find low conviction research from Wall Street stock analysts to be repulsive. It shows a lack of balls, brains, or more likely, both. And I can't respect that.
Joe, you've got Tesla in your ETF, don't you?
I do. What's remarkable is we've seen this staggering decline for Tesla. I'm looking at the chart right now. November 4th, 1243 was the high. Guess what, Melissa? It's still above its 100-day moving average. So it's maintaining the strength of its technical formation. I think overall, once you get past a lot of the tax selling that's unfolding, specifically related to Tesla, I think on the other side of that, and once you hear from earnings, it's a company that you want to reestablish a position in if you have gotten out, or initiate a position if you don't hold one at all.
Dude's making a hell of a lot of sense. Over to Twitter, a couple of tweets from Gary Black. Quote, we expect the street to keep raising Q4 volumes and earnings estimates into year end. Our $2.06 and $6.30 estimates for Q4 and full year are likely too low. They are, Gary, but still higher than the streets at 197 and 621. Our 2022 volume of 1.52 million vehicles delivered and earnings per share of $12 are way above Wall Street at 1.298 million and $8.66, which are rising. Now, this is really important. Tesla's earnings per share next year are going to absolutely blow away expectations. So too will their deliveries. And the disconnect between consensus estimates and what Tesla's actually going to deliver on are a huge opportunity. To provide some more context, we'll look at this picture from the Bloomberg terminal. The red line here are consensus estimates for Tesla's full year earnings per share in 2022, currently about $8.66. And the white line, Tesla's stock price. There seems to be a very strong correlation between earnings estimates and the price of Tesla stock. We can see here earnings estimates lifting, Tesla stock following, then Tesla stock getting a little bit ahead, then the estimates increasing. But generally speaking, there's a fairly tight correlation. The higher the Wall Street consensus earnings estimates are, the higher Tesla stock is. Something very interesting has happened of late, however. 2022 earnings per share estimates have basically done absolutely nothing, while Tesla stock has fallen off a cliff, down 25, 30-ish%. The only other time we see such a strong disconnect is around here. Earnings estimates flat, Tesla stock down, and what did Tesla stock do in the ensuing months? To the moon. It is my contention that soon, as analysts realize that Tesla's going to blow them away, the first indicator will be their Q4 results. There'll be a tsunami of increases in delivery estimates for 2022 and earnings estimates for 2022, and that is very likely to send Tesla stock to the moon. Elon's sales of Tesla stock at this point in time, in my opinion, have artificially suppressed the price of Tesla stock. It was almost $1,250 per share recently. It's now around the $900 range. That is a huge discount. And if history is anything to guide us, the relatively tight correlation between earnings estimates and Tesla stock price is likely to resume business very shortly, in my opinion. And now, back to the Muppet Show. More clueless comments from a CNBS talking head. What a surprise.
If we are to believe that the whole EV space isn't going to grow as fast as had been forecasted, Steve, I'm curious if you think Ford, for instance, may not deserve where it's trading at right now?
You know, that's a great question on Ford. And they do have, I was on their site looking at a Bronco, and 6-month wait. However, when I take a look at where it's trading at the upper end of its range, and there's only so much they can do. So I think Ford is fairly valued, personally, and I think Tesla is likely fairly valued also. Look, the bear case on Tesla, in addition to all the other ones for a while, and I'm a huge fan of Elon Musk, was that competition. And the only thing you can say about that bear case was that it was too early. Now we are seeing that competition. And Tesla hasn't changed the look of their vehicles since inception. So you can have these new cars come out that look a lot better, a lot sleeker, etc., and competition's coming from everywhere. So it's unnatural and it's wrong to assume their growth's going to continue and that it could support this valuation.
Did that really just happen? Did that guy seriously just imply that the styling of Tesla's vehicles is going to be the primary driver of their growth or lack of in the future? I mean, holy fuck, dude. This may take out the trophy for the all-time dumbest thing I've ever heard somebody on CNBS say. Forget the fact that Tesla has released new vehicles and there's been refreshes. Forget that. It seems that he believes the appearance of Tesla's so-called competition, the aesthetics, the styling of the vehicles is what matters. And Tesla won't be able to continue growing unless they restyle their vehicles. What fucking planet is this guy on? Let me know in the comments below if anybody's heard a dumber comment ever made about Tesla. I mean, maybe I'm forgetting a few things. There's been a lot of doozies over the past few years. But seriously, man, this hurts my brain. Somebody please send a memo to the team at Tesla. You guys and girls obviously need to restyle your vehicles regularly because that's the only way to continue growing. That's the only way Tesla stock could possibly continue to grow in value. It's got nothing to do with massively expanding production capacity. Berlin and Austin factories about to come online. Nothing to do with your manufacturing costs. Nothing to do with your industry-leading profit margins on vehicles sold. Nothing to do with the staggering demands, wait times of 6, 9, 12 plus months. It's got nothing to do with the technological lead. It's got nothing to do with the innovations in manufacturing. None of that stuff matters. It all comes down to aesthetics, vehicle styling. Let me guess, this guy also thinks that the most important thing to women is how men look.
I just don't believe that'll be the case.
Yeah. John, you own some of these EV names.
I do, Mel. Fisker, Lucid, Tesla. You take a look at where they were 2 months ago, Mel. It's one of those situations where you zoom out just a little bit, and they're all still higher than where they were 2 months ago. Did they peak, like, for instance, Fisker, from 20 to 55 in 2 months? Was that an all-time peak? I don't believe so. That was Lucid, actually. I'm sorry, Mel. Fisker was a different level. But I think all of these stocks are still going to be accumulated. And Steve, you know how I respect your opinion. And I know you love Volkswagen, and I think they'll sell a lot of those EVs. But they won't make nearly the same amount of money on those, Steve, that Tesla makes on theirs. Because look at the price they're selling those Volkswagens or Porsches. Different story, of course, high luxury vehicle versus the Teslas. Tesla's able to make a lot more money on the sale of those, and they don't have the legacy costs. They don't have all those costs for pension and the legacy issues with factories that many of those other competitors that you're rightly calling them competitors, they are competitors, but they have significant dealer networks and everything else that cuts into their profitability dramatically.
Absolutely nailed it. This point is not discussed enough. There's two major components to Tesla's enormous advantage when it comes to the financials of the company and their profitability. One, legacy costs, which we just heard about, and two is Tesla's technological and manufacturing advantages. They have an extremely efficient, lean business. They're able to produce their vehicles much cheaper than anybody else because they're using techniques that nobody else is able to, willing to, or has even considered using. They continue to drive these costs down, and they have massive economies of scale producing electric vehicles that no other company is close to. Long story short, Tesla is and always will be far more profitable than a legacy automotive manufacturer producing EVs because they don't have the legacy costs. And the second reason is that Tesla is far more efficient in terms of manufacturing. You just can't compete with this.
Weiss, what do you say?
But there's also a wide range between 7 times earnings and 100 times earnings. So I think would 50 times earnings be the right for Tesla? Could be. And by the way, consumers like having those dealers where they can go and take their car in and have it fixed. And that's why Tesla's putting more out.
The fuck is this guy talking about? Maybe he's confusing service centers with dealerships that also do servicing. But there isn't a single mentally healthy human on the planet who enjoys the automotive dealership experience. There is a reason that I call these stealerships. They add no value. This is an email to a customer who'd reserved a Ford electric vehicle, the F-150 Lightning, from a Ford dealership. RE, Lightning order. If you would like to be one of the first 25 orders, there will be a $30,000 market adjustment, aka we would like to fuck you in the ass to the tune of $30,000 just because we can, because we're a dealership. All other orders will have a $10,000 adjustment to the price because, again, we just like to ream you in the rear end because we can. The additional deposit required is $5,000 and will go towards the purchase of your vehicle. If you choose to cancel or not proceed with the order, the deposit will be forfeited. Once again, we would just like to ream you in the rear end because we can. Nobody enjoys going into car dealerships. Nobody enjoys having to negotiate the price of their vehicle rather than just have a set purchase price. And I don't think there's too many people out there who like getting fucked in the ass without consent.
Look, I think they can, I think so many could be winners in the group. And true, you're not going to have the same profitability by car that Tesla has, but that's why Volkswagen's going to overtake Tesla as the #1 EV seller, as they already are in Europe.
Man, I really hope this guy doesn't manage money for anybody. Holy shit. And there you have it. Earlier we saw some Wall Street stock analysts, using the term pretty loosely there, whose balls and brains seem to have the collective mass of a tic-tac, coming out with a huge spread of price targets on Tesla stock. $350 per share in the worst case, all the way up to nearly $2,000 per share. Come on guys, do better than that. And now we have a genius claiming that the fact that Tesla doesn't have 469,000 different styled vehicles and update them every 3 seconds is likely to hold them back from growing, and finishing up there with another perler claiming that Volkswagen is going to outsell Tesla with electric vehicles globally very soon. Let me know what you guys and girls think in the comments below. Am I being a little bit harsh, or did we just see some of the dumbest things we've ever heard spoken about Tesla and Tesla stock? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.